Where's your chat? Comments and reactions. I think it'll be there.
Well, we're here. We're going live. There we go. I think we are live now. Hi, everybody. It's Stacey, and I'm here with my friend Joe Bill. Hi, Joe Bill.
Hi, Stacey.
How
Hi.
are you?
I'm good. It's good to be here in a live thing with you, my friend.
Yeah, we've been talking about it for a long time, and we're finally doing it.
Finally doing it. Yeah, why not?
Got my little, thank you, John. John Tim behind the scenes.
Yay. Thank you, John Tim.
Thank you, John Tim. Now I got to share this while we're talking, but we did our festival this weekend. Thanks to you and all the performers. It was amazing.
It was so much fun. I love the idea. Did you end up calling it a LaRonde?
It was, yeah.
Epic LaRonde.
Epic LaRonde. And I think for next year, I think we should actually try to get a Guinness Book of World Records for the longest LaRonde.
Longest chain of story, LaRonde chain story. We're both into the chain concepts.
Yep. And, Jill Bernard opened it and closed it.
Oh, did she?
Yep.
As the same character? I missed the opening and closing. Sorry, Jill.
Yep. Well, we'll get it out to you because it was beautiful. So we're gonna cut like the Second City with us. I'm typing. I'm talking. I'm sharing. It was just so much fun. I think it would be awesome to make it we want to make it an annual thing. I think it would be so much fun. And Jill's thing, of course, we were all exhausted. Everybody's crying at the end. And this beautiful ending about, you're the one to bring people joy. Everyone's like, that's all we want to do. So.
I think like any, I've only done one marathon that lasted, I actually didn't do the whole, I think I did 24 hours of the 48 hours for Santa or whatever. I didn't do the whole thing that happens at the ETC. Yeah. Mm-hmm. But I did pull an all-nighter, and I don't know how people do it. I don't know how the people in Edmonton do their freaking, 48 or 72 hours of like the soap-a-thon or whatever.
Yeah.
Up at, I don't.
I mean, honestly, I've been kind of opposed to the all-night thing just because I'm getting old. Yeah. I mean, I used to stay up all night twice a month. Like every other week I'd have an all-nighter. And I can't do it. My body just can't do it anymore. I abused it long enough.
Yeah.
And it's like, hey, now you got to take care of me. I took care of you. You got to take care of me.
That's right.
But not that that's happening, but my intentions are there.
It's on your vision board.
It is. Actually, Letters to Santa is one of my favorite things. So it brings us to the topic of Second City, which is what I just wanted to chat about today because I am nerd out about these things. And so we know yesterday was a big day in improv news, Joe.
Yes, it broke. And there's a lot of improv news around this Second City, the forming of the teachers union.
Yep.
Entering into that. I'm really excited. Your brother's going to join us.
Yeah. A lot of people, I think, are wondering what that even means to have a private equity company, what it is, what are their motivations. And so a bunch of us were just chatting about it on the Improv Resources Facebook group. Or Discussions and Resources, the official name. And I thought, who knows this stuff is my brother. So my brother teaches mergers and acquisitions at Babson College.
That's convenient.
Yep. He's a lawyer and mainly works not as a lawyer, but using those skills as a business broker and brokering big, giant sales just like this. Sometimes private equity, sometimes not. But he has a very interesting perspective and can explain a lot of what I really wanted was somebody who's not a comedian or an improviser or a sketch comedian or an improv teacher. I wanted somebody who's just totally outside of this world and looking purely through a money-making lens.
Yeah.
Because originally the announcement was Andrew Alexander is going to sell, and he's going to sell hopefully to somebody with BIPOC representation of some kind, and that sale would result in Second City being a more racially just place because it would have at its highest level. And so, yeah, as many of us discussed, the best part of the article about the sale, it explains that, and then it says, this private equity firm is not that. Right? This is not somebody trying to come in and make somebody with a passion for comedy who wants to nurture a more just culture or equitable culture. It's about money.
Yeah, and I mean, I've been an improviser for a long time, but I've also been on the in-house side of it with training companies before, and so there's a whole context where people that are contract trainers or a mix of contract and in-house full-time trainers for training companies. I've been mostly contract, but when a company gets sold, a training company gets sold, usually, and we're talking like, soft skills. So I started doing training in the 90s, back when people were doing presentations on overhead projectors with transparencies and all that. And then towards the end of the 90s and early 2000s, there was this sort of rush of European companies that would buy a bunch of training companies. And the way that they turned a profit was to thin everything out and get rid of the dead weight and what offerings are making money and what offerings aren't making money. And there's too many people working here. And your top level of facilitators or instructors need to either, there's like all of a sudden all of these demands come. And it's all about serving the bottom line. But what I've noticed is that the people that start training companies, if you call them sort of the prophets, they have a vision, they're unique in their marketplace, they differentiate themselves from other players in the market. And then after about 12 to 15 years, it's time for them to sell. So then they sell to somebody who's usually associated somehow in-house, and then those people become like the disciples of the prophet, and then everything starts to get weird, and then it starts to very closely turn towards, we need to flip this house. And once that first thing of like, I'm cashing out and money's introduced in it, then did I just freeze there? Sorry.
No,
okay.
I don't think so.
I just froze on my thing. Yeah. So once the idea of let's cash out comes, it seems to me from the inside that idea of let's cash out just seems to multiply until it just turns into, it's a commodity. Let's see what we can invest now, and then let's look forward to X amount of time to buy it later. But I've never sat with someone like your brother to hear what their thinking is. I've been on those calls with, the investors or the angels or whoever, whatever name you're going to give. And, I've heard all the assurances in a training context.
But it seems like the overall pattern is, and we're going to have Chris Griswold join us in a little bit too. The thing is that it seems like, you've had your training experience and your corporate experience. I've worked with 250 different brands that were housed at, these biggest companies like Unilever and Procter & Gamble. And these giant companies buy something, Stacey's Pita Chips or Ben & Jerry's, and those are success stories, but it feels like more often than not, they come in and they strangle the thing that was the heart of the organization in the first place, and then all of a sudden they make it worthless. It's like they buy the company, but instead of like what's working about this company, they have to put it in their own terms. Like when you're Pepsi, a $10 million profit is nothing. The profit has to be insanely huge to justify the company having it. So I'm super curious. It's 3:56. My brother will be here in a few minutes, but let's. I think that's Chris over there. Let's bring Chris in. Chat with him a little bit. You ready? Are you ready?
Chris Griswold?
I thought you were there. I saw you.
I am here. Hello. Hi. What's up?
Hi.
What's up?
Just talking about, just in general, like when a huge company buys a smaller, successful company, that they usually suck the life out of the thing that they suck the life
Like the
blood,
soul.
yeah, out of
Yeah,
that
the
company.
soul.
Yeah.
The soul, the
Yeah.
life force, and the thing I would ask to you, and then to pass to Chris is, sometimes a company, their identity evolves, and so the process of evolution is still in terms of the original thing that made it unique. But then once those people go away, that evolutionary process gets interrupted, as I've seen it.
Yeah. I don't know. It reminds me of Yahoo. Yahoo likes to buy up a lot of things and then kill them off. Like, I mean, Tumblr, they didn't quite kill off, but they really strangled it and changed the way it worked, and people stopped using Tumblr as much.
I have a Tumblr account.
Do you use it, or do you post
No,
links
it's
to it
there.
once in a while? Right.
once
Mine's
in a while.
dormant too.
Yeah.
But that's I don't know. I was immediately concerned when I saw that, because it's like I don't know. To me, the brand is the strongest thing for a company that's investing in Second City, is just to use the name for things.
But like Second City has its brand, but then it also has like the really negative legacy internally that
That would
went
need to
into it.
survive like under new management. Forgive
Right.
us for the sexist, racist past.
Yeah.
Right? Like under new management,
And-
but not going to change anything.
And they did the right. I mean, I know John Carr a little bit, and he's brilliant and great. And so for me, the immediate concern is like, oh, they hired this brilliant mind who could really. This guy's got a shot to change stuff. But now this happens, and it's like, oh no, I've never seen an investor smart enough to let a talented new, artistic director, managing director, executive director, whatever, like to give them a chance, because they were kind of brought in by the old regime. So
Right.
I'm really curious about that.
Right. I hadn't even thought about that part of it, Joe, that no matter how like brilliant and talented or whatever, he's not someone they brought in. Like when there's a new election.
Yeah, or like a network, a network division. Somebody takes over nighttime soap operas or nighttime. Oh yeah, we developed you under that former person, but now no, go away.
I am having weird flashes of this being an odd metaphor for Second City artistically as well, where friends of ours, Joe, who I won't speak for by name, but who got brought up to the main stage because they were unique and bizarre or crass or odd, who were then didn't thrive in the Second City culture because Second City chose someone everyone loved because of their unique voice and then asked them to play Second City style. And so the performers felt like, why did you pick me if you didn't want me to do what I do best?
100%.
and
I
same
also,
thing-
yeah,
Sorry.
we know who. Yeah, we know who we're talking about. We'll give them the dignity and respect to like not name them. But I mean, not only, I mean, they were, it's like a squashing thing, and I mean, those people are talented enough to go, okay, I'm out.
Right. And thrive,
But it's-
but
Yeah, and thrive. But it's, I mean, there's for sure. There's got to, I'm curious about what level of toxicity still remains. What has been, what's Anthony LeBlanc, and I know John's been, kind of on the job the last month or two, but in that transition with Anthony into like John, how much of a, kind of a Will Luera style listening tour do they go on to let everybody get stuff out? But what remains is, who knows?
Yeah.
Go ahead, Chris. What do you think?
No, I I can't imagine what they want with Second City. I don't know.
That's what my brother, when he gets here, is because what you're saying, Chris, is right. You were like, why would they walk into this thing and Well, sorry, go ahead. You finish what you're saying. And then
Yeah, but I mean, what are their assets? I mean,
right, you were just saying it's just the brand, right? So
to me, that's the strongest thing.
Right.
I know there's corporate. I know they've got corporate contracts and things like that.
Right. So from the bit of inside insight that I had
Right.
from the time I was there, and I have 20 years of using improv in a business environment, so we chatted to see if there was any way we could work together, and so I got little snapshots of a very specific period of time, but based on that, I mean, really, the theater has never been a profit center. It's a loss leader. A theater, even for Second City, is a loss leader. You're paying 6 performers equity wages, which aren't a lot, but is a lot. You're paying a musician. You have to pay a tech who can do light cues and rehearsals versus a stand-up club. So if you're thinking about it could be kind of like an improv or whatever, but a stand-up club just pays the headliner. They really pay peanuts to the opener in the middle, and they don't have a live musician. They don't have a tech. A lot of times it's just the same person, just the door person walks over, it makes the announcement, turns on the lights, brings out the host, and nobody comes back to the tech booth until it's over. I asked for a sound cue one time, and it broke the house. Nobody knew how are they going to give me the sound cue, right? So a theatrical production, and let's remember, it's not an improv theater; it's a sketch comedy theater, which requires some production value. So that's a lot of people you're having to pay off the bat.
Right, and to me, it really does. It reminds me a lot of when someone bought National Lampoon. And it's not like they made more anything, really. They just started licensing the name National Lampoon to direct-to-video comedy movies. And so, to me, I think Second City, the brand works for comedy projects, but even more so, if you want to do an applied improv program and you call it Second City for Business or whatever it is, to me that's the most profitable use.
Well, and they have that Yes and book that Kelly Leonard wrote, and that's been doing really well, and it's takes everything everyone's been doing and puts it under the Second City name, so this business book is done well. So they have the corporate training, but also I had heard rumors of like a Bar 3 Fitness, but it's Second City training. It's like the gym for the fitness of your soul. Right? It's a community, and that is what's thriving, right? We're all struggling with the theater part of our theaters, but the training centers subsidize the theater, right? They're usually the first thing. Yeah.
It's either it depends on the theater. For every theater, it's either the theater is a loss leader for the classes, or the classes prop up the clubhouse. It generally is, because improv theaters don't make a ton of money, even Second City.
No, not even Second City. And so this is a great segue, because my brother immediately started looking for some of these numbers, right? So we're going to bring him out, but I do want to just really quick, just so you all know who he is other than my brother. John Hallal has a track record of success in entrepreneurship, mergers and acquisitions, and in operating and advising emerging growth companies. Through his company, Network Blue in Boston, John advises lower middle market companies in various forms of M&A transactions. Already don't understand what I'm reading. The firm focuses on the healthcare and technology sectors.
M&M? Is that just M&M transactions? Is that what we're talking about?
S&M transact? No, that would be much more money. The firm focuses on healthcare and technology sectors, employs a multidisciplinary approach to execute every aspect of a transaction. So he's right in this sales of big companies world. And he's had several entrepreneurial endeavors, including helping restart a medical device distributor located in Arizona, co-founding a durable medical equipment supply company in Massachusetts, and most recently, launching and operating a cannabis products company located in Northern California. And and he's also adjunct professor at Babson School of Business, teaching mergers and acquisitions. So here is John Hallal. We're going to add him to our conversation. Hello. Wait, hi. That's not John. I was all excited. I did that whole lead up. Who's there?
Can you hear me?
Yes, hi.
Yeah, in the chat, in the group, improv group discussions, I saw this link.
Totally.
I joined. My name is Serge.
Hi,
I'm
Serge.
Ukrainian, traveling in the States right now, and I am into improv since 2009.
Awesome. Thanks for joining, Serge. We were talking about Chris, I'm going to bump you into the green room for a minute.
Great.
Okay.
Sounds good.
Yeah.
Yeah, we can't hear you real well, Serge. I don't know if you can get closer to your... Are you driving right now? You hanging in your car?
Can you hear me like this better?
Yeah, a little bit.
Okay. Well, yeah, I'm at the parking. Hold on. Okay. Let's see. How do I...
Where did you say you're from again, Serge?
Ukraine.
Ukraine.
And you are an improviser there in the Ukraine?
Well, I started in 2009. I was the first one who started the short form improv comedy in Ukraine, and pretty much that's what we have. We have a lot of improvisers now, but all of them are into short form. Whose line is it anyway? This is, and actually, I wanted to. I don't know. I just I don't want to steal the show, but this is really the thing that really makes a commercial revenue and somewhat success a short form, because it is easier for people to understand and participate.
Absolutely.
Long form requires people that are on a different level of understanding of what is going on. So that's why we have a lot of. I know for sure that we have at least like 10 groups of improvisers that run every week's show, and they run their schools. This is how they make their revenue. But in they make more money when, because of their performances, they're invited to corporate events and private events. So we do have full-time people that do this, but they are performing with the hopes and with the PR for them to get real clients, and this is how it works for now in our country, in Ukraine.
And your sound dropped off, Stacey. But I would
Thank you,
imagine.
Joe. I was asking how long has improv been in the Ukraine?
There you go.
Well, 2009. That's when I started it. I'm the guy. Facebook.com/improv club domain back then.
Yeah, so I think
I registered the trademark. Registered the trademark Improv Club.
Nice. Amazing. That's awesome. And I think that I love that you called in, especially in this conversation, because I think you represent like where Second City started. Right? They were doing short form. They were taking these games, and now we're looking at them being purchased by a multi-million-dollar private equity firm for potentially $50 million.
And in the sense of long forms, Serge dropping in here is a very fun reminder that one of the tenets of improv is the ending is in the beginning.
Yes.
And so is this a foreshadow of where Second City goes back to?
Yeah, just totals. Everything is in cycles. That's amazing. Well, I need to bring my brother in real quick. So I'm going to bring my brother in, but you can call back in a little bit, Serge, okay?
All right.
Okay, thanks for having you. We'll
Thanks
talk
for
more.
calling.
Okay.
Amazing. That was
Yeah.
beautiful. Hi, John.
Look
Nope.
at those feet.
That's not him either. Oh my God.
I love it.
He keeps telling me he's in the green room, but I think he's getting blocked by other folks.
Other people that are coming in.
Yeah.
Yeah, this is turning into its own sketch comedy bit.
Here's Chris Griswold back. Let's add Chris. Oh
But
my
it
God.
is
My
like-
brother keeps saying he's in the green room, and there can only be 4 people at a time. There he is. Okay, it actually has his name.
Good, you have him now.
There he is. All right. John, there you are. We just went on a nice adventure. When you were trying to get in, there can only be 4 people in this system at a time. People kept cutting you off, and we met Serge from the Ukraine. And then
How's Serge doing tonight?
He seemed upbeat, positive.
It's late. It's late there in the Ukraine.
Yeah, it must be. And then
Didn't
we
he
saw.
say he's in the United States right now,
Oh, did he?
I think.
Oh, I might have. I was trying to sort
Could
of
be.
cope with everything, so I might have missed it.
So Serge from the Ukraine living in the States. Okay.
All right, and this is my brother John. This is my longtime friend Joe Bill John, and
Hi, John.
Chris Griswold, who's a newer friend over the past few months. We've been working on stuff together. So we're so ready to talk about why a private equity firm might be interested in purchasing Second City, and how they might look at that. Well, first of all, what is a private equity company?
Sure. Yeah. I think that's probably a good place to start, Stace.
Oh,
to
you're very
understand their
professor-y.
goals.
I like your very professor nature right now, John.
Well, a private equity firm. So a private equity firm is a financial buyer, and as opposed to what we call a strategic buyer, which is a company already in the space. So a financial buyer typically is a private equity firm, and what a private equity firm is basically a group of investors managed by another group, and they go out and look for opportunities to buy companies, and they have certain goals in mind, and we can talk about those in terms of what they look for. But in terms of structure, there is a small group of managers, and they invest a little bit of their money, and they go out and raise money from investors like high net worth individuals, endowments, family offices. That's offices that invest some portion of a very high net worth family's wealth. And so they bring that money in and they create a fund out of all of those proceeds. And in that fund, they'll go ahead and try to make, 6 or 7 or 8 or more investments, that is, buying companies. And typically, and this is really important, and I'll stop and get questions, is the hold. So private equity firm, when they start a fund, it usually has a 10-year time horizon. Sometimes they have an ability to extend it a year or two, but they have to go and get permission from their investors. So we're talking about a very short time horizon in terms of investments. What does that mean? They buy, it depends on what cycle of the fund they're in. Could be in year 3. I don't know what cycle they're in, what year they're in. They need to buy and sell before the end of 10 years. So their strategy is very different than a strategic.
Right. So, and a strategic one is somehow wants to incorporate that in their bigger functioning. Oh, I'm a data management company. I want to buy this email company to incorporate into my overall business strategy. Right. That's the strategic side. This sounds more like, with the whole GameStop thing, I've been looking at buying short and like I've watched Wolf of Wall Street and I've watched The Big Short. So in a way, you're trying to you are trying to increase the value. So you're trying to buy something low and sell it high in 10 years or less. And is there a person who's going around making this pitch to investors and being like, hey, help me buy Second City, and you'll see that in 10 years it'll increase its value through this, this, and this. Is there somebody leading that sale right now raising that money?
So yeah, typically most of the money's already in. And so I don't know I think it's Strauss Zelnick, and Zelnick is apparently a name in the media industry. But so usually they'll raise like 100, 500, or $1 billion fund, and it's either raised, maybe not money in the bank, or it might be committed capital. So they know when they need to draw on capital, equity, cash from their fund to make an investment, it's there. So it should be committed capital.
So the people who are investing the money, that was my question. And these people, so basically there's a lot of layers. Like I might have money in that fund, and then there's someone managing that fund, and I might not even know the specifics of exactly where that money is going. I'm trusting them to buy and sell businesses the way I might have a stockbroker handling my portfolio.
Yeah. It's a good way to put it. So let's draw a little line, okay? And the management company, that is the owners of the private equity firm, are above this line, okay? And they're connected to this line. And underneath this line are all of the passive investors, okay? All right, and this is the fund all the way around, like a little silo. So the managing partners of the private equity firm, people who run the private equity firm, as apart from the fund where the proceeds are, they're the ones that go out and look for deals. They're the ones that create the deal flow, because they look at 1,000 deals and maybe invest in one. And they're the ones who deploy the capital. They're the ones who help manage the company, grow the company, and then decide like when to sell the company. All of this, though, is full disclosure to the limited partners, to the passive investors.
Okay. But it's very distant, and like even as you're describing it, it's even more money focused and less, like more distance between someone who would actually like care about, because Second City and the whole improv community on this other side is evaluating social justice and pay and how you care for your teachers, right? And people have been hoping that whoever buys this from Andrew Alexander, who was sort of pressured out of his ownership for not being sensitive to racial justice, to put it the mildest way, I guess I could say it. So he had these racial justice issues. He got pushed out. He said he was going to sell it to hopefully a BIPOC entity of some kind. And then, the pandemic, this is all during a pandemic. I think people are not going to get that kind of attention and care, or might somebody come in and take care of those things on a prospective purchase.
Yeah, okay, so the main priority for a private equity firm is to make money, first and foremost. Having said that, having a social conscience and doing the right thing typically helps business, doesn't hurt business. Okay. Mm-hmm. And a lot of these private equity firms and the partners are good people and they care. But the underlying documents, right, which basically say, we're going to invest $500 million in you. They're doing it, that is, the investors are putting up 95% or, at least, of the capital. They're doing it because they're seeking a return on their investment. And what the typical return is what private equity firms shoot for, is 20% year over year. So every year, the investment that is made on equity, okay, is expected to increase 20% per year. And so that's what they're not promising, but telling their investors that we're smart guys.
They're anticipating
Yeah.
that.
And that's what
Is that like the value or a cash out value? So like if we use 100 million as a round number, then after 1 year, that value should go from 100 million to 120 million. Is that?
That's correct on the equity. So what happens is, say it's a $50 million deal. Well, we could use your example of 100.
Mm.
And they're going to use some leverage. That means they're going to go out and get some debt. And they're not going to get much debt in this deal. They're going to go out and get $50 million of debt to finance the purchase price. Okay? So that means bank. They're going to get a loan. Okay? And how do they get a loan? They leverage the assets of the company they're buying. Okay, it's not really appropriate.
Right, which
in a deal
leads
like,
us to
like
that.
this, but, yeah.
Yeah. So you said when we were chatting earlier about this, you said you saw statistics that improv or that stand-up clubs, which would be kind of the closest model. If we said, okay, they think that opening clubs all over the country is going to be where they're going to see that 20% growth in equity, but you said there are easy to find statistics that show stand-up was growing 2%. So
Right.
it wouldn't be a convincing argument necessarily that that's a growth industry, even if improv were as cheap as stand-up, which it's not. So there's also
Right.
that obstacle.
Yeah, so I'm not an expert like you guys on the industry, but just going back, so to that one thing, make sure it's clear. 100 million, maybe it's boring, but not you asked the question.
No, we
You
want to
asked the
know.
question.
That's what you're here for.
It's on you.
I feel
You
like I'm
asked
in
the
a
question.
graduate school class right now,
That's right. Well,
and I love it.
Are you asleep yet? So, okay, so
No,
it's
no.
$100 million purchase price, 50 million of equity. That means 50 million of cash taken from their $1 billion fund is being deployed in this one deal. The 20% growth is on that equity, on that 50 million. And so if the value of the company goes from 100 million to 500 million in 5 years, you measure that's the enterprise value. And so you measure, what your equity position is now compared to when you bought it. So that's kind of how it's done. Yeah.
and in 10 years, they
and
want to
that-
increase by how much? Is this exactly what you're going to ask, Joe?
No. Like equity
Oh.
position, like is that still the 50 million?
Yes.
Like-
And it's a 50 million of a $100 million company. 5 years later is 500. And so you can do the math
so-
on that.
So then that's now 250 million. Did I do the
Right.
math right?
Yep.
Okay.
So using the
then-
number,
yeah, mhm.
using the number 50 million that Second City was purported to be asking, and say they got it, and I'm the investor in this, and in 10 years I want to turn that 50 million into how much to make it worthwhile?
20%. See,
Each year.
I don't know how. Yeah, each year. I don't know
Okay.
how. What if they're getting debt on this? Like I don't know anything about the financials of Second
Right,
City.
right.
But
But
I
it's
would
a-
assume they are obtaining some debt to
Right.
finance the purchase. They
And
like
let me
to
ask
use
one other
leverage,
question.
yes.
So the entire, you had a statistic of the entire comedy club industry was what? How much? 350 million?
Yeah. So that's what I have here. I just did some quick research. 350 million approximately.
So if you
Or-
were an investor and you were paying around 50 million to potentially increase it to equal the entire comedy club value, would that seem unrealistic?
Yeah, I think that there's a difference between value and market size, right? So, maybe if you control, 200 of the $350 million of the market, maybe that company is worth, $500 million. I don't know. But we look at, when we make investments, we look at the market size, but if we look at the total addressable market, the TAM, this is pretty small. $350 million market is pretty small, and investors in private equity firms and private equity firms themselves, you're right, very important factor is the size of the market, number one, and two, whether it's a increasing market, because you can get, if you buy right in a growing market, okay, you have the ability to rise with the tide that can create value in and of itself, in addition to your strategies for the acquisition.
And that was when I was at Second City and I had some of these conversations with the leaders at that time. They said the theater itself doesn't make money. It's a loss leader.
Oh, really?
And they were making the most money at that time from cruise ships, which they lost the contract even before the pandemic, which was a big hit. But the cruise ships and then classes and then somewhere in that mix that wasn't disclosed to me is any kind of development with industry deals and show development. Like even during the pandemic, they've been making a sketch show in a partnership with a production company that's actually really enjoyable. So the potential can only, in my mind, they can make money by franchising or making a chain of their training centers and making it like a 24-hour fitness of the soul. Because I think the percentage of people who want to be professional comedians is very small, but the percentage of people who are taking improv classes now as a way to make friends with adults, it's really, people are really isolated, and improv classes have been where people have been finding community, where they used to find it in like church. It's kind of a secular place. People can come together, interact together, have kind of a magical experience and leave uplifted. So so I'm thinking training center, and then, and Chris, you're talking about the brand, like just leveraging the brand in entertainment properties.
This is my question, and I want to be clear on this. So, would your assumption be that they think that this company can turn around a higher profit? Is that what the interest is? Is the possibility that this company can actually bring them in more money, or is it the assets and are they adding it to a portfolio that's going to help them in some other way?
Right.
I think that's the question is, like, how long is Second City going to be around after this?
Yeah. I think, this isn't my industry,
Right.
but just listening to you all, Stacey, these are some great ideas, and there's no question that Strauss-Zelnick, the buyer, has a plan. We don't know what that plan is, but some of the ideas that you just shared are absolutely on the table, and I wouldn't be shocked if some or all of them, are part of the strategy. So they're not just buying the company in terms of the, Second City for Second City itself and the shows and the revenue it generates, probably mostly there, I would assume, in the brick and mortar, right, club. I'm sure that, they have other revenue streams. I don't think that's the primary purpose of the deal, and they're not expecting the growth to come from Second City itself. They're not, I don't think, looking to do that because, first of all, the market itself, as Stacey pointed out, is small. Two, the growth rate of comedy clubs is 2 or 3% a year. Too small. And it's expensive. You guys would know a lot more about that than me to run clubs, right?
Yeah.
So,
Yep.
I will just, before we get into all the things that you said and just touch upon them, because again, I'm going to defer to your strategical thinking around this particular business. Sometimes private equity firms invest in fragmented markets, meaning that there's no one giant company that dominates the space. And just knowing Stacey, right, your industry is full of just one shop owners. No, I'm not diminishing it. It's just the way it is.
It is. It's a young art form, a young business.
Right, exactly. And so maybe one of their strategies is to sort of, reinvent improv in some way, add things to the menu, and not go out and set up, 100 Second Cities, but potentially purchase some of these mom and pops. I don't think this is their
Why'd
main
we do
strategy.
a nonprofit? I can't sell a nonprofit.
Okay, right. So that's the problem. I don't think that's their strategy, but that's called a roll-up. Yep.
Well, that's what I think a lot of people are thinking might happen.
Yeah.
but you
Yeah,
think it's
and that's-
less likely. Go ahead, Joe. Sorry.
Right.
Yeah, so there's two things on that, but that's what happened to the training companies in the 90s and the early 2000s. These European investors came and they bought like 3 different training companies who before were competitors, but now they're under one umbrella and it's one company, and these people offer consultation and these people offer soft skills and these people offer, operations and strategy skills, but we're all under this banner. And so then my question would be, like, I know some private investors, they might be green-minded. Like, that's the one that comes to mind. It's like they want to fill up a portfolio full of companies that are like looking to help the environment, sustainable, energy and all of that. So, my question is, like, are they looking to buy Second City and other companies that are like Second City, or are they like somebody who's managing a retirement portfolio, and it's like, let's put a little in comedy, but let's also put a little over here and put a little over here.
Well, you looked
I don't know
into
what
that, John, right? You saw a little bit of what it's education.
Yeah, I just looked. I looked a little, just quickly. Right, obviously, one of their big scores was Take-Two Media, and what they did is that they were the publisher of Grand Theft Auto, which is one of the Take-Two Media games. So they know what they're doing with media and the digital game as well. So my guess is that their main focus is likely to be leveraging the brand, using the brand to recruit top talent, and then doing the things that you were saying, Stacey, creating content, whether it's to be on networks, cable or streaming, and potentially use Second City to do some stuff in Hollywood. Again, I'm not an entertainment banker or attorney, but also you mentioned social media, the importance of that in community and all of the things going on there. And a light bulb went off in my head when you were talking about that, about creating a sense of community and having content and something that draws people in.
Yeah.
Right.
Yeah, it sounds like it could do all of these things now.
Right.
So it could roll up all of the mom and pop theaters and their training centers and all the corporate. There's a lot of independent. When you were saying that, light bulb went off for me about there are corporate entities that are 1 or 2 people that absolutely could all be into one thing, plus the digital. And you could make the case that it's a smart purchase because UCB has been largely shut down, and they were really dominant in the space for the last decade, like massively dominant. And now they've been really diminished, and even more than Second City, they were called out and have kind of become the evil empire, which is an opportunity for Second City, who was painted as the evil empire by UCB, is now sustained itself and endured beyond UCB. So there's that. And in the pandemic, how many venues are going to be sold for a song right now when the doors, if and when doors ever open again?
Yeah, media, entertainment, travel, leisure industry. It depends on where you are in the cycle. Some companies are cleaning up. A lot of them aren't anything that deals with, sort of in-person entertainment venues. But it's going to change. It's going to come back. It's just going to take a while. And just back to I want to talk about price for a minute, because another idea. I don't know if it's a good value or not, but it seems like it would be. Is this idea of doing corporate trainings? Like you said, cruise ship was one of the big revenue generators for Second City, which is very interesting. And so maybe this private equity firm that work with they bought Take-Two Media. They also have a lot of experience in education, online education and training. Yeah. So maybe part of the strategy
they've been doing it since
that.
before the pandemic. They had already, because their name extended beyond, and people want to take writing classes at Second City. So
there you go. That could be part of the strategy, right? It could be part of the strategy.
I could totally see them at least licensing the name out to other educators, other providers. Second City to me is the best known name in improv outside of improv. I don't think my parents don't know what IO is or
No.
UCB. I mean, they know what UCB is because I talked about it enough. But Second City,
Go to your room, Chris.
don't think.
Right.
But
It's
Second-
whose
Second
line is
City,
it anyway?
my parents- yes,
and then
yeah, absolutely.
Second City, if that, right?
Yeah.
Yeah.
Yeah. Yeah, I mean, it's an unbelievable brand, right?
Yeah.
I mean,
It is.
look
I'm
at
looking
the
at
legends.
their portfolio. And
That's
not
what you should
a
do.
lot of well-known brands.
That's it.
You know, and Take Two is their best-known brand other than Second City now.
Yep. So, because Second City is, right, in terms
Yep.
of it's been incredibly impacted by this, you got to believe.
Yeah.
They may be hurting financially. I'm sure they are. I have no idea whether or not 50 million is a good price, but when you have a down cycle, typically, your revenue is affected, your costs, you still have rent to pay, and if you want to keep people, you still got to, this, Stacey.
I know.
You all know this, right? And so maybe they're, buying this company at a fairly low point, which is an attractive purchase price for the private equity firm. That's one of the things that they look to do, which is buy a company at a, now I wouldn't say low, but like at a good bargain, a fair price, but more fair for the private equity firm than the sellers. Because by doing that, you start with a lower value in terms of the value of the business. It's easier to get the return that you're looking for, rather than starting at overpaying for a business or paying a high price. So that's one of the things that that is going on. That's what they look for, attractive purchase price. That's
Chris.
central.
As you and my brother are talking about these things, it's like really clear this higher level of just the licensing. Like we don't do anything but and so that's what Colin Thornton was just saying is they just accredit corporate training. It's just a seal. They just make money off of a seal of approval. Yeah, that's interesting. And then Abby Christopher was saying, could the brand be diluted? And I think that is the problem, right? And that's why you sell high, and then it takes another 10 years for it to sort of lose that shine when it's like how hard do you milk it for everything it's got, like a joke. How long are you going to milk it?
I was going to say, but if you get a monopoly, so it's like I was talking to you about the model in Tokyo and in Japan. Their big comedy exists in Japan, and there's an organizational aspect to it. I'll use that word, where they own stand-up clubs, sketch comedy clubs, improv clubs. There's a major league like in baseball. There's minor leagues, and then anybody who's trying to do a little school outside of that. In a way, that's kind of where the hobbyists have to go, because when you're here, then you're in the big dance heading for the big league. So
that's a great point.
It's awesome and horrible at the same time. The power of that, right? Like the amount of power they can abuse because they are the circuit, but the amount of resources they can share and the amount, like if there were a way we could do it as like a union instead of as a syndicate, or as a, as
conglomerate.
Conglomerate. That's what I'm looking for.
That's a scary word.
But think about this. I mean, they don't even have to buy comedy clubs. If they are just licensing, or not comedy clubs, improv theaters or anything like that, it's potential that, you've got an empty theater in Chapel Hill or somewhere, and they can just put the name Second City on it. And now it's a Second City place. It's just like 7-Eleven offered conversion packages to all the bodega owners in New York City. And so all of these mom and pop bodegas suddenly turned into 7-Elevens. And then that just increases brand awareness even more.
Yep, and that could be one of the primary strategies. We're not going to go necessarily purchase, although I don't know how expensive it would be to purchase a lot of these mom and pops, but maybe it's just license. And create a revenue stream that way. Also, verticals. I mean, you have the brick and mortar clubs, And then you have all these other verticals that we're talking about, right? Just the educational aspect, the social media, the corporate trainings, and it's a very fragmented market. All of those things are fragmented. And so we like to invest, says a private equity investor,
Right.
in fragmented markets. Because why? Because if we could become potentially a consolidator and bring companies into this vertical or additional verticals, and when we do that, we achieve economies of scale.
Yeah.
Right, we can run your shop better than you can run it.
Yeah.
Because one, we know what we're doing, and two, we have all the back office stuff already.
So I
we can
worked
handle-
with a fast food chain, a massive one, not McDonald's, but that level, but a little bit nicer. And one of the executives there was like American Dream. He had started mopping the floors when he was a teenager, and he financed his own franchise, and the franchisor that he worked for, his employer, helped him fill out the paperwork, and like, you got to go find $70,000 more in property to get approved or whatever. And he's like, I don't have it. He goes, just go find $70,000 in personal property and then bring this back. Like, real old school business. Got his franchise. And so it's that American dream. But he said, today, you can't just own one franchise and be able to survive. It's up at 13, 17, 18 are the low numbers, because of the cost that just first hurdle of being in business is so high. And so the economy of scale is a thing where it's like, that's what makes even trying to be some kind of united front of independent theaters. We'd all have to pay the same person, which means we would have to become kind of one company.
Yeah, do
ourselves.
kind of what they're doing. Go ahead, I'm sorry. Yep.
No, that's just
so,
trying to...
So it's fragmented, right? So, they have resources, like you say, whether they buy, license, create these other verticals that we're talking about, but, they have a short time horizon.
Right.
Not long. So get all this stuff done, putting money, all these growth strategy, and execute on all of that. Okay, what do? They sell it. Who do they sell it to?
Yeah, who do they sell it to?
I'm just guessing. I don't know. Again, it's not my area of expertise in this particular industry, but I've been around the block a little bit, as you can kind of tell. But how about a large like media and entertainment company, of which there are several? What about Live Nation?
Yeah.
Right.
Right. Okay, and what about another private equity firm that's behind Live Nation and other companies like that or whatever, looking
and I brought this up earlier that
bigger.
Whit was saying, even this media company that they have, that it should be more present in media. So maybe to Comedy Central or whoever owns Comedy Central, right?
Broadway
as they
media.
start. Yeah.
There
They
you
do
go.
have a division that's media, though. Yeah, their Second City Media, I think, is a division within.
Yeah,
Second City.
they do, but their deals have always been kind of unsuccessful.
It's a comedy theater. I mean, I want to go back to just the question of like, what are they selling? When you talk about like getting a loan to this is the Jeff Michalski question. It's like, what are they buying? What like is the physical space, the lights, or whatever? It's still, I mean, it's Las Vegas anyway, but you're betting on the perceived potential of what the returns can be rather than something tangible, right? Yeah, John just put me to Disney.
Yeah.
They're absolutely doing that. They're always looking at, they put together a pro forma and a strategy. It's very detailed. It's amazing. If you were to look at what they're doing, you imagine it. And so what they do is they have a lot of smart people, junior people, mid-level people, cranking on all the research you can find in this industry. They hire outside research firms, pay them, $500,000. This is before they buy. These are rough numbers, to produce reports about this industry in the most granular way. This is all they do. So they hire that firm to help them. And then they hire, other, sort of due diligence companies. Then they sort of sift all of this information, and they, distill it is a better word, and then they come up with their strategy. And they have several, and then they put it together, and they say, here's what we're going to do with this company. And they pitch this company to the investment committee, okay, and then says, oh, this is compelling. And I can guarantee you it isn't because we're going to, put in a giant addition at Second City in Chicago, and,
Right.
And double the capacity, and then go build one in Southern California. I could guarantee it's not that.
Yeah, and this is Sergey, who we had visit us from the Ukraine earlier. He said he could be the guy for them to move into the Russian, Ukrainian speaking world, which is a really good point, actually, which is we've been very North American centric in talking about this potential, and Improv has just moved into India. I remember when I worked with brands that had just gotten into India, and they just talk about billions, so many people, China, and Improv is everywhere
Totally.
now.
So
Lloyd Alquist, who's like epic. Yeah.
Yeah, the worldwide market, from my half-hour research this afternoon, is 1.5 billion.
Yes.
For comedy clubs, not just comedy in general, which is massive, right? But like if you're looking at Second City in terms of what their core business is, which is essentially a comedy club, as far as I understand the model, that's 1.5 billion worldwide, way bigger than just the U.S. So the international aspect is very intriguing.
Yeah.
Yeah.
And so I started. Sorry, go ahead, Chris.
No,
I'll tell you.
it would honestly, it's such a, it's an under, to me, I don't know. I haven't imagined is somewhat known outside, and I think if you take Second City, that Second City brand, and you take it to London, you take it to Dubai, wherever you need to go, I think you can establish new locations. That's a much bigger number than I was expecting to hear.
1.5 billion.
Yeah.
Yeah, they usually like the market to be in the tens of billions, but this I don't know much about this. It's big. It's a big enough market, right? That in and of itself. But I don't think that's. I would be surprised if that's their number one strategy. I see them doing that potentially to increase brand awareness, even more in Europe, so then they can leverage that brand awareness into some of their other verticals, their other businesses that they're going to build around the brand.
Let me give Abby a quick answer. Abby asked, what would they be selling to the investors? And in the document that my brother was just talking about, that John was just talking about, circulated, that document that you were just talking about would be highly confidential, right? That's their entire strategy. Like, it would be massively kept under wraps, their growth plan, right?
100%. In fact, I was lucky enough to close a deal late last year in a pharmaceutical services business, started by two great guys, and they grew the company, for 8 years. This is a similar thing. They sold to a private equity firm, and so you can see firsthand, sort of, they kind of share the story on a high level to the people they're buying the business from, because they're going to be included. But that in and of itself is extremely confidential, right? Never did I see their internal, presentation, sort of before the closing, before the sale of the company. Never did I see that. That is the work product of many, many thousands of hours, and potentially a couple $1 million of research that they put into studying the the industry, everything there is to know about the industry, and then the various strategies that can be implemented to grow the company. There's all these different models. Yeah.
Those plans are so expensive that I remember when I lived in Eugene, there was this big concern because Sony was going to open a chip plant there, and they were doing all the studies, environmental studies and impacts, but they had to take into consideration that if Sony opened there, all these other companies were going to open there because they can't afford the research that Sony does into whether a city can sustain itself.
Right.
So they just copy Sony and are just fast followers.
Stacey, the question that was asked, I think it's important. I have a huge fondness for Second City. I love the legacy, right? And then I'm sure the buyers do too. And they know that in order to really create the value that they need to and want to, they have to preserve that legacy and take care of the brand. Okay? But we don't know exactly what they're up to. We have no right to know. We have no way to know because this is private. It's private equity. So it's a company that buys privately held companies. These aren't publicly traded companies.
That's right.
Right? So it's private. So we can't get any information unless they want to disclose that information to us. It's not like I could go online and figure out, okay, what Exxon's doing and all the things that they're doing, and Live Nation or whatever, right? I could do that online because there are rules that our government has which demands that publicly traded companies have to make disclosures. Publicly
Nonprofits
traded
as
means
well, because we have a tax benefit.
nonprofits.
Yep.
Right. So publicly traded companies, the four of us could go buy stock in a publicly traded company on the open market, right? So that's a publicly traded, it's publicly available, that ownership. And for that, these publicly traded companies have to disclose all sorts of information. Not the case for a private company like Second City.
And while we don't know while we don't know the financials, we know that what they're holding is electronic media, Take-Two Media, entertainment, and training.
Yep.
Yes.
Yep.
And so those of us that are in this and that use, like the gold of improvisation is all over the world now. Companies want improvisation as soft skills training for their people. The allure of Second City and all improv is, like our friend from Ukraine said, it's all about short form. Short form gets the laughs. Short form is where the aspiration can be. That's where the career is. That's where the money is.
Yeah.
And the allure for businesses, well, if our people can think fast, you mean this is so funny, but you can learn something too? Like
It's fantastic. Yep.
It is. And that's,
To me,
I think,
it's very compelling. It's very compelling.
I think that's
Yep.
why I'm obsessed with it, because it's what I do, and the good. If this could be done well and with respect of people, like it just could be an awesome thing, because I believe in improv, and that's why I do it. I believe it makes people's lives better when not abused.
I hope that's shared with Strauss Zelnick. I don't know them, but but let me tell you,
But
can tell you, you'd be surprised that very successful businessmen, very successful private equity partners who've been doing this, buying and selling businesses for many decades. Not everybody. Everybody hears the horror stories that they're just out bottom line, bottom line, bottom line. Of course, we get that. There are also folks, leaders at these firms, who care about people and who care about value, who have values. Okay, who do the right thing. Not saying you could agree with everything, and they're out to make a profit, but do it in the right way. Mm-hmm. There are those folks out there too. So.
And you'd be surprised, actually. Like, I remember I worked for a large soy milk brand, and I worked for a regular milk brand. And because of our culture, we sort of are demonizing milk, and soy is progressive and cool. And I will tell you, the soy company was not cool, and the milk people were the salt of the earth. And same thing with massive manufacturers that we all have opinions about. I worked with some that everyone demonizes, and those people really believe in what they do. And there's one everyone thinks is really cool, and those people are just superficial and care about the money. So
point well taken. Yep.
I do think that we make assumptions about corporations and their personas. And of course, I worked for a branding company, and it was about controlling your own story so that you're not made into the demon when you're the salt of the earth. But it's not what we think.
So I would say one more thing about the brand. You guys are making great points. I got little light bulbs now kind of just illuminating in my brain from what you guys said. licensing, all that stuff, definitely viable, but they got to be careful not to dilute the brand. And
Right, which is what Abby was asking. Yeah.
Yeah, it's I don't know how they're going to leverage technology. I'm sure that's part of the plan, but Second City right now, and it's going to probably change, but there's still going to be this fundamental nature that it is a people company, right? People entertain, people create the content, talent creates that content, right? Now, I'm sure they'll have some technology training and all that kind of stuff, but the content needs to come from somewhere, right? And so, so they know this because they're very smart people, the private equity firm. So, I don't think they're going to, just sort of, abuse the brand and not continue sort of building on in some way. Expanding on it,
to their
building on some way the
benefit.
core. Absolutely. Yep.
So one more
just thinking
question.
about the,
Oh, go ahead, Chris, and then no, Chris, you go, and then I'll ask one more question. We'll let you go, John.
Cool. I'm thinking just about the video archive
Yeah.
that they now own.
Yes. Yep.
And you've got like young Tina Fey or whoever. You've got like people who were doing Second City long before they were famous, and that's all going to be really useful, not just in and of itself to license out or to
I'll tell you though,
use in
it's
media,
not great
but to build the
quality.
brand.
I will tell you, it
It's
is
not?
not great quality. It's not. They did
No?
not invest
What
in
a shame.
capturing those shows. Yeah,
They did not.
they really didn't. The sound and the quality is not.
Imagine if the sound and quality was great on that.
That's what Just for Laughs. So Just for Laughs is like this big industry festival, John, that was like one of the top two. You get into the Aspen, which doesn't exist anymore. You get Just for Laughs, the stand up. You've made it, where you get a manager or whatever. And they have recorded. Like they have old Dane Cook, old Mitch Hedberg. They have, all this beautifully recorded stuff. But again, another way that improv and sketch are different from stand-up is it's very hard to capture well. The miking, the camera angles. It's another challenge of having an ensemble-based art form. So Second City just like they'd have an archival like one shot or a couple shots, and I think they've been better the past few years. So as these people become famous, right, what they're shooting now in the past few years, I bet will be better. So but Just for Laughs sells, licenses all their old content. They have
This just
DVDs. I
reminds
bought
me-
DVDs.
Yeah. This just reminds me of when I was working at UCB and I just found a huge box full of 1990s ASCAP VHS tapes that have just been unattended. It was like, people want to see these.
Right. It would have had Amy Poehler in it, John, and like.
Yeah.
So my last question was related to this whole thing about whether people care or don't care. And we won't know until we see. But in general, from your perspective, I live in Portland. It's obviously progressive, but and people think we're radical. But in my experience, what we care about, everyone cares about within 5 years. So things like hormones and trans fats and, people cared and talked about those things like hormones in your chicken or whatever. So this is my question. Are massive companies and private equity investors invested in social justice and reforming the system somewhat to make it more welcoming and inclusive to this younger generation?
Interesting question. So, there's this whole thing, I spent some time at Babson Business School, and we have just a growing sort of social entrepreneurship initiative. And so, there's absolutely that going on. For this particular deal, I'd say it's really less about, sort of social justice, and it's about, expanding the brand, not safeguarding the brand, and using the brand to leverage using the brand to leverage and open up other opportunities. But I'm a big believer in doing the right thing, and I hope that Strauss Zelnick is too. I know that people on the other side of the table for me, more often than not, do the right thing. They do the right thing more often than not. So maybe that's just me, looking at things with an optimistic viewpoint.
But it also could be the people
yeah.
who you have an affinity for and who have an affinity for you because you are a person who tries to do the right thing, So
Yeah, I try. Doesn't obviously always succeed, but
I know I have a
for
long
sure.
story of things
I
you
know.
did when we were
Please
kids.
don't.
So just a real
So
quick.
anyway.
So when we were home alone, so John's the oldest and I'm the youngest,
boy.
and we have two sisters in between. And sometimes we would do this thing where we would run out of the house with like ketchup all over us, the girls, and then my brother would ketchup on a knife, and we were like, "Wah!" and like put on horror shows for the neighborhood. So
Yeah, back in the late, the 70s, and Stacey would be the late 70s at this point for you, since you were the youngest. You guys know it was like maybe it's a free for all, right?
Yeah.
So it's just So it was a free for all.
Yeah, and I didn't expect that like their intent would be social justice. I'm just hoping that I'm hoping we're getting to the point where people realize that it just has to be part of your business model, is learning and examining how to reform a lot of these systems that are preventing diversification in a successful way.
Yeah.
Can I try one quick hit question? Sorry.
Yeah, I feel like I'm in a Babson Business School class right now.
Yeah, you are.
You are, yeah.
But let me
Right.
tell you, there's a reason why that school is 20 years the number one entrepreneurship school in the country, because they forward thinkers.
Yeah.
So.
Great. Awesome. Do you have one more thing, Joe?
Yeah, the quick question is and in the training industry, so a new buyer comes in, they tell leadership that exists, you have X amount of time to show us profit, to show us progress, whatever. And that time I've noticed tends to be a year or two. And then if at the end of 2 years that they don't show the growth that they need to see, then they have somebody else come in. And increasingly, the new people that come in to replace the other people that aren't hitting the marks are people that are farther away from the heart of what the business is. Is that just my perception on a limited basis, or is that something that sounds right?
Yeah, I think that resonates, right? That resonates. So it is a relatively short leash for the leaders of a business that has been purchased by private equity to execute. It's all about execution.
Yep.
And that pressure stems from the short hold. It's less than 10 years, right? It could be 5, 7
Right.
years, average 5 to 7 years, sometimes 4, whatever. It depends on the private equity firm. So in that pressure cooker, you need to perform. And if you're not, if you see this all the time, I don't know if someone's going to be remaining. I think clearly someone, some of the leadership at Second City is going to be remaining, at least for some period of time. But if
Hopefully.
Oh yeah.
Yeah, I
Hopefully,
would think
John
so.
Carr.
I would think so. For some
Yeah,
period of
they
time.
made a hire that is a great hire right like a month ago. Great hire. This guy, if there's anybody that has a chance of turning things around, it's this guy. And now this. And so my worry is that they're going to give him the short lease to serve the bottom line. And it's the old thing. What's more, even though there's no shareholders, is the bottom line more important than the product or service, or vice versa? Or what's the balance?
Yeah, there are shareholders, right? There are.
Yeah.
It's the private shareholders, right? It's all of the investors in the fund. So yeah, it does dovetail to the strategy. Maybe it isn't like, okay, we need to grow earnings, profitability, X first year, second year, third year. Maybe it isn't we need to grow revenues, X, Y, and Z. Maybe it is we're going to worry about that a little bit later. Here's what we're going to do in year 1 and 2, implement the strategy, build the infrastructure we need to create more content, education, So maybe that person is different than the guy or woman who's just driving the bottom line. So,
Right.
it depends
And that's
on
how
the
it is
strategy
currently,
part.
right? So yeah. So like John's position is what Kelly's position was. Is that right?
I think so. I mean, managing
Because there
director.
was a CEO and managing director. I don't know. Anyway, it's going to be.
I'm not sure the title I want to speak, but
It's going to be interesting to see, because this is the thing I say, and I say it all the time. And in my experience with all these brands I worked with, like the brands that were actually able to successfully implement our recommendations were privately held. And the publicly held companies had too much pressure to answer to shareholders, to take the time to make longer term decisions that would benefit the company ultimately. Like a little
more
bit of
red
planning.
tape.
Yes.
More red tape, more regulations, publicly traded, internal and also external from the government. You have NASA and you have SpaceX.
Right.
Right? Big government, red tape, and look what Elon did with SpaceX. Right?
there's a car up there.
Yeah. So private, and then they took it. So
Right. Yeah, it's hard in like watching, even in these big publicly held companies, a lot of the staff was required to change their position every 18 months, which meant at 18 months, you're either getting promoted or demoted. So in 18 months, such a short time to make any impact or change on a brand, right? So it was really forcing that focus on an individual level to reflect the shareholders' perspective, which is where I think we start to lose heart and human responsibility is when those pressure cookers. And I didn't know how much a private equity situation is exactly the same kind of pressure cooker. So I feel both hopeful and totally demoralized through this conversation. I've got
Just like before you walk on stage.
Oh my God. Thank you, John, so much for joining us. I knew that once we started talking about it, you'd have tons of insight for us. We're just sorting it all out. So I appreciate it.
Yeah, it was my pleasure. Hopefully it was somewhat helpful. I know I had fun. You guys asked really good questions, and so did your audience.
Yes.
So thank you for that.
Yay! All right. I love you so much,
Good to meet
John.
you,
I'll
John.
talk to you soon.
Bye.
Love you.
See you guys.
Bye.
Take care, man.
Yay, it's my brother,
Wow!
John Hallal.
Look at that Halal family of Hall of Fame achievers.
But I don't look like everyone else in my family looks Arabic, or more Arabic than I do.
You got the Italian.
Like dark eyes. I think I got the Portuguese and Italian blend.
Nice.
We're
That's
half.
what I order at Starbucks.
Yeah.
She says to the two pigment depleted ginger guys.
Right. And we're conscious, like I just want to point out to anybody watching that we're conscious that we don't even in this conversation have any DEI representation, which is a whole other piece of this. I mean, it's the heart of this puzzle that we've been talking about today. But
And
yeah,
that last thing I asked was kind of, I was aiming at the heart of that because I love John and he's great, but it's like your brother said, the pressure cooker is even if somebody else is in charge of changing the bottom line, right? Okay, licensing and corporate people, whatever, bottom line. John, in our vision and our strategy, you are going to eliminate and turn around institutional racism. You got 2 years.
Right.
And
Right.
then it's like,
right. But here's the hope around it. And here's my genuine hope around it. And I didn't know that I would be speaking about it publicly, but like this is what I thought. I hope that they know enough that they know nothing to say, John, go. So not just like, John, 100%. Go fix everything, but John, go and tell us what you need for us to support you in your efforts. And we're not going to we might ask a question or two, clarification or absolute essentials, higher, but we're going to let you lead for real. Like that's the question. Are they going to let him lead for real? And you had entered in the whole part of like, they may not want to just inherit John because he's not their hire. But boy, would that be a real terrible way for them to start if they didn't. I mean, and
It would be
where
the
else would they
singular
go?
worst way.
Yeah. So there's that kernel of hope in me that here's why. There's this that they'll do. This is their chance for a fresh start, as sort of, right? And it can be a whole new era, and that era can be focused around nurturing their people. And if their goal is to make these crazy leaps in the bottom line, their best chance of making those leaps is if they spend this time and is if they spend this money on these resources to make these reforms in their infrastructure to make sure it's actually inclusive, because nobody gives a shit anymore about products from a company that hasn't include diverse voices. It is noted, like that's why we have to be self-conscious that we have no BIPOC faces up here right now. And and I'm hoping, that as these conversations continue for Curious, we're having a diverse team work on this stuff. Like Second City, it just has to be done. It's not even, it's racist, it's sexist, but it's also old, right?
Yeah.
It's 65 years old, and VTSL's 30 years old. We have a lot of institutions that are old that have hit the wall. And then we have places like SAC and Dad's Garage that are 30 years old. And these are all mentors to me over these past 12 years, right? And I have watched Dad's Garage and SAC Comedy Lab evolve and continue to grow. So, there's been the same ownership and the same leadership at Second City forever. There's been the same... there was the same managing director, VTSL, and there's just a point at which this applies to me in running Curious. I'm like, I've been doing it for 12 years. That is a long time. How can I move into a position where I'm making space for the newer generation? Because we've had a cultural shift in the past 10 years that I don't think we've seen since the 60s, right? Yeah.
And hopefully some of that money your brother talked about, I was kind of amazed when he talked about the amount of money that they invest in research.
Yeah.
So hopefully if that research was done in the last year, part of that money for research went to, we need to really make D&I&E a freaking priority here in order to make
this is an opportunity. This is a place where this company is losing and that we can turn into winning by attending to this. And a
consequence will be the bottom line will go up.
Yes, absolutely.
It's just like an improvisation. There's a difference when you're allowing the entertainment and the story, the comedy to be the consequence of your connection versus you're just focusing on the ending or you're focusing on being funny. And so, I'm that much of a nerd that I hope my hopes are like with you. And to me, I just feel a measure of terror. Like I really hope Second City works out, and it's just going to be. I can't even get my brain around all of it. And we didn't even ask about the impact of the teachers union.
No, but it seems like the article said they're fully aware of it, and it's not seeming to. But you're right. Like that is going. I like the idea that the union will reinforce any suggestions that they need to repair relationships. And I think that's what we're talking about. So my favorite thing from therapy that I ever learned is that we're always balancing three different things: self-respect, what we want, and relationships. Right? So I think improv is all about relationships. But business, when you're looking at the bottom line, is about what you want. You want to get from 50 million to 350 million in less than 10 years or whatever the actual numbers are. And the thing that I believe in is that you're more likely to achieve what you want when you fully tend to your relationships, and that those relationships are the heart and soul and the fuel of everything else. But that is not the traditional capitalist. I mean, that's what 9 to 5 is about. from the 1980s. That's what the movie 9 to 5 is about, right?
What?
Great.
Wait, what? What are you?
9
what
to
is 9
5.
about? I love it, but what are you saying it's about?
They
Dead
came
people?
in and he was an asshole to all of the employees. He was a total
Right.
dick. And then they tied him up, and then they had work share, they had child care, they had, all the stuff that people are calling socialist was just like taking care of your people at a massive company. So then all of a sudden productivity, and the reason why they got away with tying up their boss, spoiler alert, 30 years later,
It's so good.
Great.
is that they got away with it because he got the credit for all the work that they did, and the bottom line went up because they took care of the people. So I don't know.
Yeah, I think that's your mic drop closing statement, Stacey. That was pretty.
Okay, great. I think this is the closing statement. Natalie Sullivan, everything is 9 to 5. All right, guys. Thanks for chatting with me. Let's do more of these, hey? And get more diverse guests to join us as well. At least my brother's an
having
Arab,
me.
so my brother and I make one Arab between us. So there was a little,
love it.
like a little color, but we'll do better. Thank you guys so much.
Thanks, Stacey.
I love you both.
Good to see you,
I'll talk
Chris.
to you soon.
All right, nice seeing you. Bye.
Bye.
Bye.